right. Hello, everyone. How are you doing today? All right. Okay. So for those who don't know or who are new to our Traders Talk, I'm Louis. I'm the market strategist for Fullerton Markets, and I will be your host for today. Okay. So I'm really excited for today's interview. Right. So today we have our guest, right, the founder of Sonic R System. So he's actually one of the most popular thread in Forex Factory, with thousands of followers, 78,000 post replies, and his on-the-dot accuracy and trading philosophy has inspired many traders. Right, so currently he's one of the top 20 contributors on TradingView website, right, the next-gen social trading platform. Okay, guys, are you excited? Because I am. Right, so to let you guys know as well, when I first started trading, right, I actually followed our guest, right, when he started on Facebook, right, on his Facebook page. I just started following him, looking at the trades that he's taking. Sometimes he'll share content there as well. And that's how I learned when I first started, right, not long ago. So which is why, I'm really excited to be interviewing him. And furthermore, right, our guest also won the Best Trading Guru in Singapore, right, for 2018, and his trading school won the Best Trading School Award for a trade fair organization. Okay, so before I introduce our guests here, if you're excited, right, please send in a 1, right, just type in a 1 in the comment section to let us see, right, let us hype up our guests as well. Send a 1, right, type a 1 into the comment section, all right? Okay, I'll be monitoring the comment section. And of course, even before I invite him in, if you like the content that we are doing, right, interview with all these gurus around Southeast Asia, help us to like and share this video. And of course, do subscribe or follow our page as well. And later, I will let you guys know what is the name of our guest Facebook page. Okay, so without further ado, let me introduce and invite our guest in today, Mr. Kyaw. Hello. Hello, bro.
Hello. How are you doing? I hope you can hear me.
Yeah.
All right.
It's great, right? How are you, bro? How are you doing?
I'm doing fine. Yeah. Currently, I'm mostly doing trading and doing the analysis as usual. So yeah, doing okay. How are you? How about you?
Actually, I'm great, right? I love staying at home.
All right. All right.
I mean, as much as we can't travel, staying at home is fantastic. Right? And I believe that for you, I believe most of the work is done at home as well, right?
Yeah. Can say that. Currently, I'm in Singapore. Yeah. Most of my job can be done at home. So yeah, I'm quite fortunate enough to do so actually.
Yeah. That's fantastic. So of course, for our guest, right, Mr. Kyaw is based in Singapore. Right, so I mean, once this COVID situation is over, let's hope that we can, see him soon again, face to face. All right, bro. So I saw that, recently you went with your wife to have a very great meal, right? And you profited.
Yeah, it was her birthday. Yeah.
Fantastic, right? Wow. I mean, the US market, we saw that it was a huge sell down.
Yeah, there was something that brewing for quite some time. So yeah.
I think that's an opportunity that many people were looking at or might have missed. But of course, no worries. Today, Mr. Kyaw will be, teaching you guys or hinting to you some of the opportunities that can be found in the market.
Yes, that's right. Yeah, I'll be sharing with you what are the things to look out for, and what are the things that might come next. You see, yes, I will do so.
That's fantastic, right? So guys, stay tuned. Do remember to watch it all the way. So even before we move on to Mr. Kyaw's slides, let me just share something, right? So for those of you guys who already know Kyaw, or you are interested to know what content his team is producing, right? You can follow him on Sonic R Mastery Trading Course Facebook page, right? So that's one. Second is you can follow him on Telegram, right? So basically just type Sonic Traders and you can find him there. So actually I'm also following him on Telegram. So actually I'm following his content quite tightly, right? So I mean, very good analysis on indices, stocks, forex pairs. So do remember to follow. All right, let me just remove that. Okay, so bro, I think we can start to share your slides.
Okay. Let me try out.
Yeah, sure, no problem.
Okay, just give me a minute.
Okay, so of course, while waiting, right, for the rest of you guys, if you have any questions, right, if you have any questions, do send it through the comment section, whether you're on Facebook or YouTube, right? So no worries, I will be monitoring it. And of course, if I see any questions that I feel is good, actually, most of the questions, I will just bring it up, right? Then Mr. Kyaw will actually answer the question for you as well. All right?
Sure.
Okay.
So can you see my PowerPoint slide right now? Can you see my PowerPoint slide right now?
Yeah, I think I've shared it as well, right? We can see the PowerPoint slides, right? And of course, okay, so everyone, Mr. Kyaw will be starting, so stay tuned.
All right.
Back to you.
Okay, all right. I will be quick and as short as possible, and to be as precise as possible as well. Okay. All right, let's start. Basically today I'll be sharing about the position of the smart money. Okay, there is a way for us to identify or spot out where the smart money might be taking a position, because in the market there are all types of traders, right? So of course we do not want to follow those traders without much of the strength, right? So we want to follow the arms or strong hand rather, right? So basically we are using the technique to follow them around, so that by doing so, when the market is about to turn, or either let's say want to go up, we can foresee that market is about to turn up, or is for this current case the market is about to go down, we can see. All right, so this is what I'm going to share with you today. All right, so I'm sure most of you guys know me already. So if you are watching this on the recording as well, all right, hello. All right, so basically this is me. I have been trading for 12 years. All right, so I'm in the market for quite some time already, right? I have seen like 2008, the sell down, they call it great financial crisis, right? They call it GFC, right? So I've been there as well. So I have seen all kind of scenario in the market, but of course I'm still learning every day, right? So this is me, and this is my partners, right? This is my partner James. So basically both of us together, we run the Sonic Arm Mastery training program. All right, so okay, so let's talk about what I'm going to share today. All right, so today I'm going to share with you a quick run through on who trade the financial market. I think it's good to know, because by doing so you can differentiate, right, who are the real people that are pushing the market around or making the market to move around. And another thing that I will be talking about is I will going to talk a bit more on the macro. Okay, so I will tell you why the macro is important as well. All right, why the macro is important as well. And last but not least, of course, I will be sharing with you on the technical way to look at how to spot the smart money in particular as well. So we are all here to make money in the market, right? We cannot just choose, I want to learn technical only. This is what I was a few years back. I want to learn technical only, but later I found out that you need to know a little bit of everything. All right, so let's start. Louis, is that okay? Can see? All right.
Yeah, okay. I think everything's great, and I think Mr. Kyaw I think you make a very good point on that. You should learn a bit of everything, right? Some people say that they are pure technical analysis trader. There's no wrong in that, but I think it's good to at least you master both sides, and then you can see things in a bigger picture, right? So of course, back to you, Mr. Kyaw. Yeah.
Okay. So currently, I will be talking about who are in the market, who are the people that trade in the market itself. All right. So let's jump into it. Okay. So basically, I think the top of the food chain, right? We have a central bank. Okay, they are the boss of the market. Okay, like it or not, they are the one who dictate the market in certain way. Okay, most of the time, market is I would say is a free market per se, but we are not 100% free market all the time. Especially the period like now. All right, so basically, in the market, we have like a government, central banks, right? So they are the one who dictating the market. So put it this way, they are the top of the food chain. All right. So based on their interest rate, based on their policy, the market can have a very big move based on their decision itself. That's why we pay so much attention on market rather. Pay so much attention on the monetary policy, all this kind of stuff. You got what I mean? The ECB speeches, Jerome Powell speeches, right? That's the reason why a lot of people pay attention to that, because people are aware. These people, I would say, central bank, sort of like a speeches and direction really move the market. So this will be the number one. So they are the top of the food chain. All right. So basically, after that, we have, of course, pension fund, hedge fund. Basically, these guys are they are the trader, right? But the difference between you and me and the difference between them is that, of course, they are the trader with a very deep pocket of money. All right. So of course, these people do move the market as well. Okay, so this will be I would say, second part of the food chain. All right, then of course we have a corporation, especially in nowadays. I'm talking from the FX context. Especially nowadays, we are in the kind of like the economy. This is a global economy, all right, global economy. So the company can be a US company, for example, like Apple, all right. But their factory can be everywhere. Doesn't have to be USA. Can be in China. Can be in India. Can be anything, right? So these people have to sort of like take part in the sort of like trade operation as well, especially forex, right? Because they have to pay to a supplier in renminbi, they have to pay their supplier in US dollar, this kind of stuff. So these are the third in the food chain, all right. And last but not least, we know that, right? Last but not least, the small and the retail trader. So basically, in the market, sort of like these are the people that who are in the market to make money, but they have a lead, sort of like a force in the market itself. So they don't really, if you buy in the market, doesn't really have a big impact on the market. So basically, this trader should be more of the follower only. So if like you and me, we are the retail trader, right? So basically, we should be looking at where are those people on the top of the food chain are trading or direct going into. So we just follow along accordingly and try to make money out of it. So these are the four type of group that do participate in the market. All right. So later when we got time, I will talk a bit more on the monetary and fiscal as well. All right. So these are the four type of group that trade in the market. All right.
Yeah.
So any question on this so far? Louis, any question so far?
Let me just check if there's any questions. Right. So, of course, for those who just joined, if you have any questions, right, feel free to just put it into the comment section.
All right. Unfortunately, I cannot read the comment at the moment. I mean, of course, if there's any question that Louis you have to read it out for me.
Yeah,
okay, let me move on. Yeah, we still got quite a lot to cover, and I think the more important item will be coming up soon. All right.
Yeah,
so just now I mentioned that we need to talk about macro. Okay, I was kind of like a trader. It was I would say rather of the proud one. Because I was like previously when I was trying to do the analysis, I was so I would say proud rather, right? That I would rather look at the chart alone. I'd say if you are good in the chart, the rest of the thing doesn't matter, right? So later, as you start to have more and more experience, you can see that you buy something, you are so sure in your technical analysis that it's going to go up, but instead it come down instead. So there might be something might be missing as well. You got what I mean? So
yep.
So it's like I of course I try to humble myself, and I try to look for a way. So I come chance upon this macro. It is kind of like a big maze, right? It kind of like a big maze. You follow certain theory, you follow certain theory. After a while, you will be confused as well, because this is indeed a good maze, right? Macro is indeed a good maze, but I mean, don't worry. I'm here to tell you what I know. So whatever that I have done so far, right? I'm going to share it to you right now. All right. Yeah. So in the macro, right, in the part of the macro, okay. So I will show you another chart which is very important. All right. So another picture rather. So this is also a bit backtrack a little bit. You see, like a technical analysis and macro is like a person that you can see from here, like a person who is running. right? If the person is running straight up, that of course his shadow will be following along as well, right? So if you are looking at the technical analysis itself, basically you are following the shadow. All right, in my opinion, all right, you're basically following the shadow. So when the person is keep on running, of course you can predict that it was going up rather, right? So of course it's correct because it keep on running. The shadow also keep on following the person.
Yeah.
But by focusing on the shadow alone, you cannot predict whether the person is about to turn the direction or not. You got what I mean? So or either turn the direction or stop it. You got what I mean? Because the shadow between the person and the shadow, there is a sort of like a lagging factor in it. So this is where I start to realize that you just can't pay attention to the technical analysis itself. You also need to pay attention to the person who is running as well, because by looking at it, you can kind of like have an understanding whether the person is slowing down, and eventually, of course, the shadow will slow down, right? Or the person is turning to the different direction, and of course, the shadow will eventually tend to the different direction. So this is where I understanding the macro, or rather, some people call it fundamental analysis, right? I think this is also important. All right. So let me move forward. All right. So if you ask me, Joe, you just give me one indicator. All right, you just give me one indicator, and I want that indicator. All right, I want that. I don't need any MACD. I don't need any RSI. I don't need anything. Right, you just give me one indicator that can predict the market accurately. I will say you use this one. All right, this is what we call Fed Fund total assess. All right, you can find it in our trading view as well. So as you can see from here, you see since from 2009. Okay, so the red color that you are seeing here, the red color, right? You are seeing here. Louis can see the red color, yeah, red color line.
Yes.
Okay. Am I speaking too fast?
No, I think it's good.
Okay, the red color, because I'm like a person who is running, so I need to now wait and ask my shadow whether am I speaking too fast or not. Okay, so as you can see, the red color line basically is a Dow Jones index. So you can see in the earlier stage, they dropped in until the starting of 2009, right? Then it started with QE, right? QE1, where I draw the line, is somewhere in somewhere in the late 2008, 2009.
I think cannot see the line that you are showing. Okay,
actually, okay. Okay. Maybe in a while later, I will share with you my PDF format, right? So that you can. Yeah. So it's okay. Line doesn't really matter per se, the vertical line. But the point that I'm trying to make here is that so from 2009 until 2020 that we are right now, basically the market is there's of course up and down along the way, but you can see the market is almost on the very big bull run, right? All right, it was in a very big bull run, right? You can see. Louis can see.
Yeah, I can see the orange line, right?
Yeah, orange line. So this is basically a Dow Jones line, right? So at the same time, you also can see there is a corresponding blue color dotted line that go all the way up, right? Correct, huh? Okay, so basically this is the line that you need to pay real attention to. So if I go closer to the 2020 here, you can see that there is a very big drop in the US market, right? In the last March, right? You can see from here, what really happened was that, of course, this is a COVID issue, right? So you can see that since the COVID, really like the market was really going all the way down, and this is where they started the QE infinity. You got what I mean? So you can take a look at the blue color dotted line was gradually rising up, but out of sudden they have a very big move up. Can you see that?
Yeah.
So basically, put it this way, one of the main reason that the market have a very big run in the past, I would say 4 or 5 months, right? Since last March, actually is one of the reasons that causing the market to move so much is a very big ramping up of the this QE. All right. So how much they are ramping it up? So I have already shared on my chart. I think you can see here. It is on the there's a website link onto that as well. So
Yep.
if you look closely for the past few months, so you see from the 2009 until 2020. So basically, it's the 11 year, right? So for the past 11 year, so the market have been having sort of like they have been printing per se, printing money for until up to 4 trillion only. But in the late somewhere around March, right, they print up to $7 trillion. Can you see that?
That's insane.
Insane, right? So basically, it's like for like 11 year, $4 trillion, for 4 months, 3 additional trillion. So basically, this is one of the main reasons why the market have been rising so rapidly for the past few months. All right.
Yep.
So just now that's the reason I was saying, if you want to follow one indicator that gives you the whether the market will go up or down, all right,
Yep.
based on if you want to use one indicator, just use this indicator itself. Okay. All right.
Great.
So
So for those who don't know which indicator it is, I actually shared it on the comment section, right? You can actually find it there, right? And of course, I really do believe, right? So, the market has been moving, especially the indices, right? US stocks, futures and stuff. And it seems like, it could be an artificial kind of bullishness, basically supported by the central banks. Is that what you are moving towards? Do you think?
yes. Okay, give me a quick minute.
Yeah, sure.
Just give me a quick. Sorry about it. Yeah. Okay. So you were saying that the market, because one of the main reason that putting the sort of like a market to rise up so high is because of this printing. Is it what you're asking, bro?
Yes. So
Yes.
the QE directly or indirectly, right? It artificially supported the whole US stock market, or even globally as well, right? So what do you think about that? Yeah.
Yeah, that's one of the reasons the market is really going back up. So I'm expecting like the kind of like market shall do a lot, can go a little bit rise. There's not much reason for them to go down lower per se. All right, go down lower per se.
But okay, so of course, to add one more question is that the US stimulus seems to be still stuck halfway, right? So there's no conclusion where you'll be coming in. So I believe that could be a deciding factor on how much lower can the US stocks futures move, because currently we are seeing there's a lot of bearish momentum. But I do believe that, or in your opinion, right, as long as the US stimulus is not in or is not approved, the US stocks futures has more room to move lower.
Oh, okay. Currently, what is happening right now? So there is a very big contradictory sort of like a force going on right now. So now currently, as you know, the market have been like dropping. I would say market have been dropping. One of the reason because of the uncertainty in the election, for sure.
Correct.
All right. But I'm talking about underlying, there isn't much reason for us to be so bearish about. This is the point that I'm trying to make here.
I see. Okay. That's a very good point. Okay.
So this data, right? This data it come out in every Thursday. So tomorrow morning we should be able to see the updated one. So if you look from the screen that I'm sharing right now, you can see that right. What is happening right now is you can see that the sort of like the $1 trillion, $7.17 trillion, right? It is almost at the all-time high. Am I right to say? Can you see that? So that means they are not going lower at the moment yet. Okay. If you later when we go to the chart, you can see in last June, there was a bit of drop in the Dow Jones actually. Right. So it was in line with the fan float. You can see the fund. You can see in the last June, somewhere June-July period, there's a bit of drip lower. Right. So they are at the moment they are directly proportionate to the market. So to going up next, let's say the number is keep on dropping. The number is keep on going up. This Fed fund rate number is keep on going up, right? And the market is keep dropping. What we can understand is that the market, so-called the sort of like the underlying stays supporting the market. So we cannot rule out that the market will be so so bearish in near future. You got what I mean? So currently what we are facing might be a routine pullback. It's not a sell down just yet. This is what I'm saying.
Okay, that's a very good point. Yeah.
All right. So next, this is the very major item, the very major indicator that you need to see. Okay, my apologies because my phone keep on ringing, so I shut it off already.
Yeah.
And so this is just now the information that I have shown. All right. So I want to talk about there's inflation and deflation. So I'm sure, Louis, you must have a lot about whether the inflation is coming or deflation is coming. Am I right to say?
Yeah, definitely. Of course, I mean, some people even go as far as saying that, if there's unlimited QE, we could have hyperinflation, right? So of course, I think that's kind of an extreme view, but of course, we'll love to hear from you as well.
Okay. So to just straight to the point, right? You can see that because of all the it is not exactly the money printing, but they are increasing the sort of like a money supply into the system. You can see that from 2009. So there is just on when we were talking about the monetary and fiscal, right? So so far, what they have done until I think I would say up to 2020 per se, basically what they have done is they have done the QE on the monetary point of view. So they are not exactly printing money per se. They are increasing the supply, but they are not really printing money. So this is what we call it monetary. Okay. Of course, this is not come from me alone. Of course, I read from here, read from that. This is what I start to understand. All right. So this monetary sort of like a stimulus alone doesn't cause the hyperinflation. So that is the reason why. That's the reason why people were saying, gold will go $50,000, right? So there's no way $50,000. So I think there are people are missing out. There's a certain so-called detail point they are missing out. Okay, so I would like to repeat. They are inflationary. I'm not saying that there's not inflation at all. There's an inflation, but since they are only focusing on the, I would say, monetary. So basically, it doesn't really cause the sort of like a broad-based inflation. All right, but once they start to step into the fiscal stage, fiscal stimulation, basically, they are paying you certain amount of money per month. You know what I mean? They're just if the person is no, okay, never mind, I pay you certain amount. I mean, not just a normal amount, it's an extreme amount. You got what I mean? So it's like this is where the real inflationary will start to sort of like a snowball. So we are starting to see this. We are starting to be in that stage right now already. Okay, because as the monetary go, they have been cutting rate. We are almost going to negative already. You know what I mean? So from the monetary point of view, they don't have much of the tools to do so anymore. So that's the reason why they are talking about stimulus. Stimulus, not just a stimulus to the market, it's stimulus to the people. This is where the thing get tricky. So once more and more stimulus directly to the people coming up, I would say this is where the inflation will pick up very obviously. Okay, so this is what I think. This is the point of where we are going on. So so talking about the inflation, as you know, because of the monetary stimulus, you can see that for the past 12 years, right, the asset price has been rising, home price rises, right? Okay, but in a way, there's a very good point that we need to understand about the inflationary phase. Okay, one of the main reason or one of the good point about inflation is it is easier to reservice the debt. I think that's the only main point that the government want the market to be inflationary. So for example, Louis, you borrow let's say $1,000 from the bank, for example. Okay, $1,000 from the bank. You just need to they say, okay, you pay me 3% per year, for example. Okay, 3% per year. So let's say we are in the inflationary environment, right? Let's say you have to pay 3% per year, right? So you and the end of the year, let's say your inflation is 2%. So effectively, even though you are paying 3% to the bank, basically you are paying only 1% to the bank. You got what I mean?
Yep.
You got what I mean? So because of the inflation rate, the amount that you owe to the bank, it keep getting lesser and lesser and lesser.
Yep.
You got right. Because this year this will be $100, but in because let's say inflation rate is inflation rate is 2%. In the end of the year, it's only $98. You got right. You are paying less and less as you go along.
Correct.
So in the debt-based economy like where we are right now, inflation is something that they really prefer. Okay. So this is the inflation, and another thing is about deflation. All right, deflation is I want to go straight to the point. Deflation is also actually talk about the point that I just mentioned. Actually, is the opposite. All right, let's say same thing. You borrow let's say 1,000 from the bank, right? 3% per year. Okay, then let's say the deflation is 2%.
Yep.
So end of the year, basically you are paying 5% interest rate actually. You got what I mean? So basically, the deflation is something the government do not want because they do not say government, not it's those people who like to borrow money. All right. So because they will end up paying more than they borrow. So inflation is the way that they can dilute away their principal and interest along the way as they goes by. So talk about the which is better, deflation or inflation is better. I would say both are good and bad, depend on where you look at it. Okay. So in the inflationary market, all right, inflationary market, basically the asset price can rise higher, home price can rise higher. Of course, the money in your hand will lose their value.
Yeah.
Straightforward, straightforward. Okay. In the deflationary market, all right, so it's a totally opposite. Home price can, of course, as the price can go lower, asset price can go lower. Of course, the money in your pocket will worth more and more as the years goes by. Okay, so what is happening right now is that we are in the very big inflationary and deflationary sort of like force are colliding each other at the moment. I hope I make sense.
Yeah.
All right. Because what we are happening on the this pandemic is basically is a very deflationary. You can see in such a way that all of a sudden the whole industry just disappeared, just like on airline. Airline, hotel, all these kind of sectors. So basically, this kind of sort of like a black swan event basically is a deflationary. So what happens is the market is trying to sort of like fight each other out between inflationary force, which is this central bank assets holding, and deflationary force each other and see who is winning. So for the past few days, there is two major items that causing the market to drop. Okay, number one is, of course, there's no news on stimulus, right?
Yeah.
So everybody was expecting stimulus, and all of a sudden, oh, no stimulus. We will talk about it only after the election. So there is one minus point on the inflationary camp, and out of sudden we have a lot of sort of like a new COVID patient data spike. So there's a minus on inflationary, there's even the plus on the deflationary, correct? So that's the reason why we are seeing what we are seeing right now. So put it this way, whatever happened on the market right now, basically, if you understand this flow, you can able to foresee. Okay, so put it this way, the market can go lower, especially the stock market, right? Can go lower, provided there's no new update on the stimulus. At the same time, there's more and more bad news based on the COVID. This is what we have to watch out.
Interesting, bro. Actually, that's the first time that I actually hear on the between inflationary and deflationary, and of course, we can, for example, put, those who support Trump and Biden and how they come into play into inflationary environment and deflationary. And of course, for those who think that it's a bit in depth, right, on inflationary, deflationary, it basically means inflationary means that most central banks will aim for inflationary, right? They're always wanting the economy to improve, to move further. So they're always looking for inflation. Of course, like what Carlton mentioned, right, on the debt base. I mean, anywhere else in the world or everywhere in the world is all debt based. No one really, for example, if you were to buy a house, you don't pay full cash, right? It's all debt, and because debt is good for the economy and of course for the people as well. So that's a very good point, right? So wow, this is very interesting, and so sorry that I kept quiet because I'm actually listening in as well. But it's a really good point, and this is the first time that I heard on the take on how inflationary and deflationary works, especially during this US presidential election. Okay, back to you, bro. I'm very excited. Okay, let's go.
Okay. So talking about the election a little bit here. I mean, I am not really like to say who will win, because really people nobody have a crystal ball,
Yep.
right? But from what I can, of course, I don't really know about Biden just yet, right?
Yep.
But from because we have been with Trump for the past 4 years, right?
Yep.
So basically, what Trump did was, of course, he did a bit of a plus point and a minus point, okay?
Yep.
So I mean, it's nothing personal, but let's talk from the market point of view. Basically, this gentleman he is a very pro business rather, right? Pro business rather, and of course, I believe, and I kind of like because we have seen it for 4 years his work, right? He is on the inflationary camp. So if we win again, I think we will go back to the, let's say, if we win again, and at the same time, of course, the COVID, the data go down and stuff like that, I think we'll be right back up to the inflationary phase again. So basically, stock market should go back higher, of course, the money printing or the monetary expansion will go up again, all this kind of stuff. But on the other hand, right, if Biden win, okay, of course, we don't know what he might do, but the way that he was talking about taxation and stuff like that. Maybe, who knows? He may be saying just for the sake of saying, because to please the general public. But if it's become true, right? Basically, taxation is basically taking money out from taking water from the pool is a very similar, right? So if there's a higher taxation, actually it doesn't really do good to the economy. So if it does, it will have a more force on the deflationary prospect. I think it can have a quite a negative impact on the market itself.
Yep. Okay, that's a very good point. So I think let's talk about the Team Trump and Team Biden, right? So of course, as much as there are people who say that, wow, why would you support Trump or Biden, right? Let's think in a very how do I put it? Very structured way, right? To say that it doesn't matter who you support, but instead, what is the cost and how can you profit in this, right? Whoever wins, right? Because we don't really care whoever wins, because to us the impact is very indirect. At least for those who are in Singapore or even in Southeast Asia, right? Very indirect.
Don't really care, actually.
Yeah, correct. So I think no one really cares who really wins, but the question is, how can we profit when someone wins? And of course, to me, or in my opinion, is that for Trump, I would support Biden not because I know what he is doing, but because of what Trump is doing, right? Of how the things that he's doing, the trade war and stuff. So to me, I will support Biden in that case, right? So my opinion, so this is my personal opinion. There's no camp or whatnot. Bro, back to you. Okay.
Okay, just to add on to a certain point, of course, we don't really have to care so much. But let's say like Trump win, right? If I am allowed to explore further, if Trump win, right, what might happen is that actually it can be bad for Asia, right? Because of course, he's all this American fast, all this kind of stuff, right? It can be bad for Asia, but it can be very good for US, especially US market. I'm talking about, Okay, we are talking about money, we are talking about money now, politics here. All right. But if Biden win, I think it can be good for Asia. All right, it's good for Asia, and of course, it's another way around as well. So, so we have to see. All right. I think the first thing, if Trump win, the first thing that it will be back on track will be the stimulus. So, I think the market will just zoom right back up. Because the stimulus is back on track and stuff like that.
Yeah. Okay.
And last but not least about this, please be careful, guys. All right, just want to give you guys a heads up. Doesn't matter who win, okay, Trump or Biden win. All right, what will happen is that during the election day and election night here, right, what will happen is that the market will have a major swing. Okay, if you remember in 2016 November, which is last time, the last round, gold they swing, I would say $60 to $70. All right,
Wow.
within a day. So does it matter who ring first? If you are a short-term trader, please be very, very, very careful. Because you may be right eventually, but I don't want you to face the case whereby the market have like swing big time until take your stop loss out and stuff like that.
I, that's a very good point, all right? So for those who are traders, right, on 3rd of November, or even 1 to 2 days before and after, right, the market will, there could be some aftershock from the market. And
Exactly.
And I also know some traders who already say that, hey, I won't be trading for, at least for the whole week of during the election, because there's no point going to the market not knowing what's going to happen, right? So, bro, are you going to continue trading during that week, or are you sitting at the sidelines as well?
Currently, I still have position. But I am not really actively adding the position at the moment. So I am in the very bare minimum kind of like a holding at the moment. I still have position, but I'm not actively looking for additional new trades actually.
Okay, good point, right? Okay, so of course for those, right, just remember, even if you want to trade, right, just keep your lot size or your risk to the minimum. Okay, bro.
Yeah, please don't have that. All right. So to move forward, right? So basically, today I have covered the macro already. Just give a quick sort of like a summary. You can take a look at this chart. It come out every Thursday. All right, and I suggest you really pay attention to this. Okay. So let's say the COVID so-called cases are spiking up. At the same time, if this data start to go down significantly, it have a very negative or very bearish pressure on the market. All right. As of now, I'm not strongly bearish, or I'm not expecting a major like a multi-year sell down because of this data alone. We are not seeing any drop in the holding by the Federal Reserve just yet. If we see the number drop, we need to be very careful already. Okay, so I think this is where I will be sort of like summarize for my macro part. So let's take a look on the technical. All right, so this is my bread and butter. All right, I'm sure Louis, you had before as well. So when I was just give a quick summary as well. So when I was trading in 2008 to 2011 per se, so what was happening was that I was following all the technical indicator. Don't worry, I also used to use a lot of indicator before as well. So what happened was that I start to realize that there's something else that we need to pay good attention to. All right, one of the reason is that I would say in the chart itself, right? In the chart itself, we cannot see how strong the market underneath. That's mean, market move up, market move down, yes, but if we use in conjunction with volume, all right, if we understand the volume, I would say we have a better understanding that whether this move have a impact or not. You got what I mean? Sometimes market go up a lot, but without the volume, market can come back down. Or likewise, if market go up with a significant volume that go along with it, you can kind of say that okay, there's a smart money in the market itself, so the up move can be, I would say, sustainable. So you can predict the market better. So basically, I will just go through a quick one. There's a two major way to look at it. All right. So basically, what we are looking at is the uptrend move. So you can see here that this is a drawing that we have drawn for quite some time, but this stay be very useful. So basically, what we can understand here is a market. Market have a one up, one down, one up, one down. Right. So basically, the market, what it did was the starting point and the last point basically is the same price, correct? But because of the movement, and if we try to study based on the relation to the volume, we can have a better understanding. So as of now, you can see that the market start and the end is the same point. But look at the chart itself, you can predict that where the market might go, because as you know, we have to do some sort of like a prediction. So from the way here, you can see that when the market was going up, you can see that the volume that going together with the market up is quite significantly high, especially in the initial up move.
Yep.
That means not at the peak, not at the peak. So on the second round, also same thing. When the market is going up, you can see the volume, the association also quite high. But on the contrary, you can see that on the down move, the market doesn't really have so much of the volume. Okay. So you can see, so from here, you can see from the chart itself. So what we can understand here is that we have a up one, up two, down two, right? You can see especially on the up two, you can see that when the market was going up second time, which is on the up two, you can see that the volume, which is the line here, are very significant compared to the rest of the day. You can see. So this is to kind of to prove or give you the clue that when the market is rising, when the market was rising, there was a very high impact on the up move compared to the down move. You see, if you compare, the up move and down move are almost the same. You see, they go up almost identical, but the underneath or underlying forces are different. So you can see from here, I will show you what happened next. Okay, so you can see the market have a very good rise eventually. So basically, by looking at this, you can somehow give a better prediction. The market will go up or down. So I will give you with another example.
Okay, interesting.
This is even more clearer. All right, you can see when there's an up move, there was a very nice volume that come with it. When there's a down move, basically there's nothing much. All right. So when they are up move, there's a very high volume that come with it. When they're down move, there's nothing much as well. So basically, they just have a swing up one, down one, up two, down two. But if you follow the same principle, you can see that apparently there's more force in the up move rather than the down move. So basically, this is what happened. Okay. So it's not exactly just looking at the price action or any indicator itself. So it is more like understanding underneath who is controlling the market. You got what I mean. So this is what I start to understand and slowly start to realize how you can, I would say, predict the market with a quite high accuracy. Okay, so from here you can see this as well. All right, you can see this as well. So just on the 2 points that I just made, right? We can use the volume to predict. You can use the volume to predict the, I would say, you can use the volume to predict the direction, right? So now we are back to here. You can see when the market is going up, there was quite a decent volume. But when the market is sort of like going sideways or going back down, there wasn't a volume, right? So it is obvious already. Its market will likely to go up higher, right? Go up higher. So the point that I'm trying to make here is that market will likely to go up higher. Yeah, market did go up higher. Okay, and on top of that, okay, the study, the volume not only gives you the better accuracy on the direction prediction, it also can give you the information where is the strong sort of like a support might come back in. For example, okay, you can see that the price here, they go back down to 0.27 region, right? Here, 0.27 region. So if let's say there's a trader that who is buying on this market, okay, so he will I would say most of the time he will automatically put the stop loss around this 1.268. Okay. So because it's a swing low, this is a typical trader reaction. But if you understand the volume properly, all right, so you see, if you look at this chart, where was the highest volume? So the highest volume is somewhere around 0.244 region, 0.24 region, correct? So let's say let's say you buy, instead of putting the stop loss at 2.6, if you put way below the high volume area, that means you put below 0.263, okay, what will happen is that, because just now I was talking about here, you see, if the person put the buy here and put the stop loss just shy below the swing level, what will happen? Even though he is right, the direction eventually, what will happen? He will likely to get stopped out. Okay, but if you put the stop loss below this high volume area, which is around 0.24 region, you will be able to survive this whipping and eventually you will make money out of it. So to conclude, from understanding the volume, you can have a very good sense of the direction where it might go next. At the same time, it will also give you where are the very good support and resistance area. Okay, so this is like a double whammy. This gives you the two information at one stop, at one go. So basically, just now I was mentioning about the up move. Now it's on the down move. Also same thing, right? Also the flip side, when there's a down move coming in, you can foresee that the market, when they're going down, you can see the high volume that in it. And when they're coming back up, there's no volume. They're going down, there will be high volume in it. So this is one of the example. All right. So it really go all the way down previously. Okay, later when we go through the some chart, I will show you what is happening right now. You can use this technique to able to predict what is happening right now as well. Isn't it more fun, right? Instead of just looking at the past chart, right?
Bro, so I have a question, right? It's not for the audience, but it's actually for me. Okay, so of course, for volume analysis, right? Usually, or at least in my opinion, from what I know, it works well for stocks because you can see where the so-called big boys are placing, the volume. For indices and forex pairs, is there any recommendation on which specific charts that we should use?
Yeah. Of course. I will show you. Okay, so basically, this is what we have for today. In terms of our PowerPoint, can we move to the chart itself? I will show you. I will answer your question in that.
Yeah. Oh, so just nice, right? Okay, bro. You can now change to your chart, and of course, for those who are interested, right, you can start to ask some questions on some specific charts, currency pairs that you're looking at, right? Then of course, I will actually raise the comments up as well.
Okay, so I like to do a bit of summary by section so that we know where we go. Okay, first I share you about the who is in the market, and most importantly, I share you about the macro, right? I have been trading for 12 years in the forex, right? So I have to tell you, like it or not, you need to pay attention to the macro. All right, technical alone cannot give you the answer. All right. Later the video will be up so that we can watch again what we have discussed on the macro. And from the technical point of view, I just explained the importance of using volume, right? Using volume, I've already shown you some cases scenario, how you can, relate the price and the volume to give you a good idea. Okay. So just now, Lewis asked a very good question regarding about, sometimes certain products doesn't have a sort of like a good volume that come along with it, correct? Especially on the forex, right? So to answer this question, basically we have to make use of like a futures market. All right. So for example, for Euro USD for this case, right? Euro USD, you can look at the Euro future. Because if you go to the trading view, right? Trading view, you can just go and type Euro and look at the future. And you can see here already. So basically, the volume of this future is absolute. That means because we are taking this from the exchange, CME exchange, so the volume is, put it this way, we can rely the volume on that. Okay. So guys, if you're looking at it closely, all right. So I think now we are back to the live case scenario. All right. Now live case scenario. So this is the Euro. All right. So what is happening to the Euro right at the moment is that I hope I can draw, but can you see my my cursor? Can you see?
Yes, we can.
Okay, thanks on that. So you can see the Euro having rising for quite some time, right? But as a trader, right, you have to put it this way. Just okay, it's easier to see this way. So Euro having rising for quite some time. You can see that there's a certain area have a very big spike in the volume. Agree?
Yeah.
So we can say this is the number one here, which is on the 10th of June, right? 10th of June, we have a very big spike, right? Then we have another high volume somewhere in the first week of the September. Can you see that?
Yep.
Okay, so just now I explained two things. By understanding the volume, you can have a quite gauge on where the market may be going, all right? And secondly, by understanding the volume or by studying the volume, you can see where is a strong support and resistance. So for this case, because of this is stay quite far away from the current price, you can see that the volumes are really residing somewhere in this box area. That's why I put it a box here, this rectangular here.
Yep.
So you can see. So what the market did was that it really like swing around, do nothing, right? Swing around, just come back to retest, and so far they are failing to retest the box now already. So what we can conclude from here is that as long as this level is not broken up, for example, this box is around from 1.1774 until 1.187, right? So around this range, as long as this region is not being broken down, not being broken up, you see, market, what do you think will happen?
Move lower, right?
Yes, exactly. So this have become a resistant its own right already. You got what I mean?
Yeah.
So of course they have to break this level, which is likely to do so soon, and they will break lower and stuff like that. So what we can bias our trade is that as long as these guys are not broken down, not broken up, we can have a lower case scenario from here. You got it. So we don't really care so much about individual daily candle anymore. Because if you are honest with yourself enough, if you follow day-to-day candle, it's very likely that you will not make money, a lot of money. Put it this way, you up candle go up, then after a while come down again, So you doesn't really know whether this bullish candle is a real solid candle or this bearish candle is a real solid bearish candle. You know what I mean? So understanding this kind of structure behind the market, then you can kind of like give a good bias. Then for this case, I am biasing that whenever the market is coming down, it is more on the valid than the bullish one. So what you can do is that on the bullish candle, we don't trade. On the bearish candle, we trade. You got what I mean? Because in the downtrend, you make money by shorting. In the uptrend, you make money by buying, right? So this is what we have to do. Okay.
Wow, hey, bro, that is interesting. This is the first time that I read on this as well. And of course, for the audiences, right? If you think this is beneficial to you, please help us to like and share the video. And of course, right, and of course, follow us on Floater Markets page, and of course on Powtoon Sonic Mastery page as well. So I think that is definitely very beneficial. Yeah, wow, interesting, bro. Actually, there's a question. I mean, since we're on the live chat, someone is asking, is there the volume analysis for gold and silver?
Of course.
I think it's a gold futures, right? Gold and silver.
Yep, there is. So okay, I mean, I'm sure most of you guys are using, right? So you have to choose future, and if you're choosing future, right, don't look for those. I mean, don't choose those future market with a smaller volume. Like for example, it's better to choose like COMEX or CME, right? So don't choose basically this two is I think based on Indian exchange. So I will assume that the volume is not that great. So of course go for the biggest one. So COMEX future. All right. So you can see also here. What do you see? Tell me what do you see now? What do you see?
Okay, huge volume.
Okay.
Sell down. Yeah.
Can we see this? So there was a very huge volume on that particular day itself. It was on 11th of August, right?
Yep.
So basically, what it does is that next day we have a very big move. So people will say, "Oh, it is over, going back up." But if you follow on the volume itself nicely, what will happen is that the market like kind of like swim back, but they didn't able to overtake that huge volume, the high of that huge volume, which is around 2042 level. All right. So you see, since then, every swing back up is a shorting opportunity. Am I right to say?
Yeah.
Correct. So now, okay, and whatever it is, people can say, "Oh, Joe, you are talking the high side. It's already happened." You are telling me as if like you know what is going on. Like that. Okay, fine. So what is next? So where is the next strong level of now? It is coming back down, right? It's going down. So where is the next level of support? Where is that? Where do you notice? Because when I talk with my guys, when I talk with my team, I like to be more interactive. Where do you notice where is a good volume that supporting the price?
Let me see. Guys, don't be shy if you want to just send in the answer, right? Okay, we'll give you another minute.
Let me fill you in. Okay, you see, it was on the 20th of July, right? After 20th of July, we have a very nice run up, right? So
Yeah.
you can see the start before that there was much of the volume. Can you see that? There was much of the volume, but after the 20th of July, there was a quite a good run on the volume. Am I right? So the good supporting prices that is going to support price from dropping is somewhere around 1,800 level.
1,800.
Okay, so actually it's across the board for sure, not one day, right? We can see that it's somewhere around 1,815. All
Yeah.
right, 1,815. Yeah. So, but the point that I'm trying to make here is that when the price ever go to 1,800, 1,815 level, that may be the price where you should take your profit from your short.
Okay. Okay.
Mm.
Interesting. I think one of the audience actually got it right. Shin, right? He was saying 1,800 to 1,850, that region.
Yeah.
Okay.
Mm.
Okay. Close.
Okay. So
Yeah.
So of course, the price. I mean, do pay because this swing level we need to pay attention as well, not just the volume.
Yeah.
But I would say the volumes are more significant rather. So this is kind of like I would say hidden support and resistance per se. So when the market were able, okay. So you see, from the perspective point of view, there in the market, right? There are people who are still holding the gold long position. I'm sure, right? So
Yeah.
if you put yourself into their shoe, all right. If you put yourself into their shoe, all right. So let's say you are the person who buying the gold, all right.
Yeah.
Where the person will most likely put their stop loss. Very obvious, right? The
Yeah.
person will most likely put the stop loss just below the swing. Am I right to say? Correct. So they will roughly put somewhere around 1,850 region. Agree?
Yep. Agree.
So what will happen is that market will likely to go lower below that first, even before they will recover, even if they want to recover later on. You got what I mean?
Yeah.
So as of right now, buying in is totally out of the question at the moment. You want to buy in, maybe you can try to wait somewhere around below 1,850, or another one is the one that I just mentioned, 1,800 level. So this is how you find the support and resistance.
Okay. Interesting. So of course, for the audiences out there, do remember, right, looking at this using the volume analysis, right? Gold seems to be, there's some meat to get from gold as well, right? So just take note of that. Okay. Right. Any other
So
part?
the next chart I want to mention is okay. So basically, you can look in under future. You can look all the forex pair. All right.
Yeah.
Euro, Canadian, all these forex pair you can see. So basically, even though I'm trading CFD, right, Euro USD, whatever it is, right, I would like to pay attention to the future chart first. Then I derive the direction accordingly.
Okay. Yeah.
So now let's focus on Dow Jones at the moment. All right. Okay. So what do you see as well? Isn't it obvious now?
Yeah. Yeah. This is definitely very obvious. I think in June, right, there was this huge volume before.
There was a very volume
Correct.
in June.
Yeah.
So basically, when I draw those red color line, basically these are the level of the volumes, right? High volume. So it's like a spider web. So when the market go to this line area, the market tend to bounce, right? Like a base or the support itself. So you can see the market have a very big run from June. June they have they retest again, and after that they have a very big run. But if you notice, there is not much of the volume from June until September.
Okay. Yep.
All right. But something happened on the first week of September. Can you notice?
Yep.
Correct. So September they really came down. All right, they came down pretty fast, but they go back up, and they try to retake the high of the September, which is this volume area. So as usual, if you know this in advance, you know that this will be the hard resistance. Am I right to say? Because remember, volumes are either support or resistance, right? So they didn't manage to break, right? So after that they just swing down lower and lower, correct? So currently, they are already at the support region of this line already. So if let's say they break, okay, they are trying to break, they may or they may not break. Let's say they break. Where is the next level that you can foresee already? Where they will go to? Where they will go to? See whether the audience can see or not. Where do you think where they go to? Of course, they will go back down to this region, right?
Right.
All right. So what will happen is that when the market was dropping, right? When the market is dropping, you will not be interested in buying somewhere in this blank area, which is we call it no man land, which is the totally nothing here, because if you will notice certain area the market dropped just like the fire cut through the butter like that, right? So this is exactly what's happening, and market should be supported somewhere around this region. Why so? Because of this volume area.
Okay, so the 25,000
yeah, 25K ish there. Correct.
Yeah.
Correct.
Okay.
Correct.
So
go ahead.
Yeah. So of course, currently, I think based on the support line that you have drawn, I think is currently, supported there, right?
Yeah.
So
Currently
I believe that the room to fall will be another huge sharp fall back to the 25,000. Okay. Interesting. For the audience, do take note as well, right? If you want to take a screenshot, please do, or you can rewatch the video again. All right, bro, back to you.
So, Louis, you make a very good point. Currently, they are at the support. So now you are seeing exactly, sort of like a doji kind of candle right now because they are already at the support. So now I would like to ask this audience, let's say the market swing back right back up, right? Let's say swing back right back up. Where do you think the market will go to first? Of course, it will go back to this volume area, which is this area, right? And this area in conjunction, it can go back up to 25.6 level. 25.5, 25.6. Sorry, 27.5, 27.6 level. Correct? Okay. So you see, so because you see, people have to understand, I am quite sure a lot of people hear that, market is dropping. You know what I mean? And what they do, they jump. Correct? Then little did they realize that they end up selling at the support, which is where we are right now. You got what I mean? Then they go up, they don't know what to do already. Then eventually because the market go up, of course, from their short, they are losing money, right? They eventually close their position with the loss. Then what happened? Market will go back down to the initial level and even go down further. So this is something that you need to pay attention in advance. So the point that I'm trying to make here is that yes, currently we are at the support. The better place for you to short right now, okay, and you don't want to take a lot of risk, is for you to wait somewhere around here again. Hopefully the market come back up. All right, market don't come back up too bad, right? But that will be a better place for you to wait it out. So you see, by understanding the volume, you know that certain levels are more important than a certain level, because market is almost random in nature, guys. Try not to predict too much. Market is almost random in nature, but they are abided by certain rules per se. So I would say, studying the volume, you can have a better understanding where the market will be going next. Okay.
Interesting. Okay, bro. And of course, since we are talking about macro just now, I believe some of the audiences will be interested to know, how do you incorporate macro into this analysis? For example, leading up to perhaps the U.S. presidential elections or even the stimulus. How do you analyze the market, or maybe take some precautions on how you will trade the market in that sense?
Okay. All right. Basically, just now I was mentioning about this, right? So, for example, I would like to go back here a little bit. So, for example, like here, you can see that currently I have been saying, right, there is no drop in this number at the moment, right? So, the point that I'm trying to make here is that because of the number is not dropping, we cannot say that the market will likely all the way down.
Okay.
So, put it this way. And the line is stays supporting the bullish case scenario. That's what I'm trying to say. Okay, if you start to see this kind of numbers start to drop, right? Let's say start to drop into the downtrend, then you can have then you can, in conjunction with your technical analysis, then you can see that in that case, the downtrend will likely to stay longer than the up move itself. So that means you can make use of this technical analysis and look more on the short side only. You got what I mean? So that's why I'm not so emphasis on the down move so much at the moment. Yeah, market is pulling back. I myself shorted a Tesla and stuff like that, right? But what I'm trying to say, the underlying is there's something is not agreeing with the downside scenario yet. Let's say the numbers start to drop, then we can see that. Come on, I mean, we can short, just anything that you like.
Yeah.
So how I incorporate between technical and fundamental.
Okay, bro. I think there's a question which I'm quite curious as well. So someone from YouTube is asking, if the volume were to show exhaustion in the current trend, could it be a sign of major reversal sign? Or
okay. Yeah, very good question. Very, very good question. Okay, so there was a little bit of some characteristics that I noticed of. All right, on the volume. Okay, this is something that I found out from the per se I would say a bit more of the experience per se. Right. So when you see a high volume, this kind of normally the volume will show up at the of course at the high and the low of the market itself. Okay. So you see when the market have been rising quite significantly, all right, right? Then when the big volume show up, right, it is likely that it won't be an up volume. You got what I mean?
Okay.
Or the market having down and all of a sudden the big volume show up, it will likely to be a reversal volume. So put it this way, the volume will show up most of the time at the reversal. This is the point that I'm trying to make here.
I see. Okay. Interesting. So I mean, to summarize, basically, if the market is moving a lot higher, as you see a huge volume, you are leading towards a reversal happening, right? So people are moving their shorts or whatnot. Okay, interesting. Right, so I hope it answers you as well, JX. Yeah. Good point. Wow, interesting. Yeah.
There is of course very broad subject studying the volume. Even if you study volume spread analysis, this is basically what I'm talking. So I'm talking the one very specific aspect of it. Of course, you have a other name, other term to it as well. I mean, of course, there's a very big subject to it as well. Yeah, this is where I derive from.
Okay. Interesting. Okay. For now, let me look at comments.
Maybe we go through Tesla.
Oh yeah. I mean, that'd be great. I think some of you guys are trading Tesla, right? I think a lot of people are making money. Some, got swing out because of the huge movement. Yeah, that's a great point. And of course, for our audiences, do note that the volume analysis, it really helps you across the board, right? Not just stocks, right? It can be used in futures. It can be used in currencies. So just do take note of that, right? And of course, for currencies, just use the futures. So US futures or Euro futures. Okay, back to you. Yeah.
Okay, so you can see. Okay, of course, Tesla is something I would say not so obvious. Rather, okay, you can see that there was a very high volume somewhere here, right? You can see there's an obvious one. So like I said, the volume can be used as a very good support and resistance level. For this case, you see that Tesla have a very huge run, right?
Yep.
And also Tesla have a very huge down move. But you see, you can see where they really ended up, right? You can see where they really ended up. Okay, let me just draw up here.
Yep.
You can see the market really being stopped well here, correct?
Yep.
After that, they bounce up again. And after that, so if let's say the market were to come back down lower, where do you think it will go down to? Of course, this will be the ultimate. So that's the reason why you can see from my arrow, I'm expecting if they were to go down lower, okay, of course, nothing is 100%. If they were to go down lower, I'm expecting they shall retest this region again. So this is where I will be. For this case, I have a few short. So this is where I'll be very interested to take my profit on. Okay.
Interesting. 3 to 9. Okay. And of course, bro, for volume analysis for stocks, for stocks per se, right? So of course, for the benefit of those stock traders out there, do you look at the so-called fundamentals or the valuation of the company, or do you just look at price?
Unfortunately, no. Because if you look at it, basically, I mean, if you look at the Tesla, right, their PE ratio is really out of whack, really. You know what I mean? Just now, that's why I say in the first time, what we were saying, that if you want to know whether the market is going up or down, you want to see one indicator, just look at this indicator. You don't need to look at the PE ratio, whatever. You just as long as the money is flowing to the market share eventually go up higher. But of course, there will be a time market will break. That means, last time, in order for them to move, for example, like let's say $2 million, for example, you need the government have to pump in $1 million. You know what I mean? That eventually the market, the sort of like the amount of money that have to pump in for the market to move will be getting less and less. That means eventually you need to pump in 2 million to make 2 million. You know, right? Then eventually it will supersede. That means market have so much deflationary pressure until they have to stimulate by 4 million just to market for them to go up by 2 million. You know, right? This is where the hyperinflation will come in. So hyperinflation will not going to happen immediately. Okay, people say hyperinflation is such a big word, guys. Okay, so I think we better do not use it easily. All right. So far, all the hyperinflation countries are communist country per se, or dictator or whatever. Okay, so America, is it a communist country at the moment? So I don't think hyperinflation will come in anytime soon. All right.
Okay, interesting point. And of course, since we're on Tesla, this will be the last question on Tesla, right? So I'm asking, how can we know when the price starts to come back to the volume support zone from the upswing?
Okay. For how long we can't, because as we move forward, right? Like I said, market is random in nature. I repeat again now, random in nature. Market is random in nature. It's just that it is sort of like a guardian, like a the gatekeeper of the market. So the volumes are rather like a gatekeeper. So what I'm trying to say is that market can swing sideways for maybe for months. Nobody know. You got what I mean? But the point that I'm trying to say here is when the market come down to this region, it will likely that market should stop at least for a while, minimum. You got it? Because this level has some significant meaning compared to the other prices level.
Yeah, I think that's a very good point. So, I mean, for Alex, right? So basically, the volume analysis is not knowing how the market will move, but more of what is the support and resistance in the market. That is not very obvious. Not the usual type that you see whereby price keep hitting that point. I think that's the point that Mr. Carlton is trying to say as well. Good point, bro. Of course, there's one more, right? So someone is asking, how to analyze a big gap jump in the TA chart. I think that's maybe not about volume analysis, but something different. Yeah.
Okay. Yeah. Okay. If you notice, okay. Normally, the big gap will happen. Okay. For example, the big gap will happen when there is no volume previously around that area. You know what I mean? So what is a big gap? Basically, there is no buyer and seller at the price. Correct. So, for example, if we go deeper, for example, on that particular day, Fateful Day is on 7th of September, and the next day is on the 3rd of September. Nobody or no bid order at $440. They found the first order somewhere around $400, $407. So that's the reason why they do the gap. So normally the gap will happen previously on that level, have no much volume going on. Okay, so the gaps are the way to sort of like just instead of like going slowly, they're just jumping up and down only. So if you notice, you see, even though there's a gap down on that day, you see how well being pushed by this level itself. So or how level being supported by this level itself.
Okay.
You got it. So that's the reason why I would say market is almost random in nature most of the time. But there's some volume gatekeeper that sort of like making sure the price stay within the certain parameters.
Yeah. Okay. That's a good point, right? So for PT Choi, right? So that's the analysis on gap jump as well for TA chart. Okay, bro. Actually, there's one more on S&P 500. I think most of the traders they trade there because it's probably one of the most liquid US stocks futures lah, right? At the S&P 500.
Okay.
Right. So of course, for you guys, right, do send in some more charts that you want to look at, right?
Okay, I don't really look at the SPX most of the time,
Yeah.
but I look at it time to time lah. All
Yeah.
right, I do look at it time to time. So it's also the same thing you can see here, right? So when
Yeah.
the market was really coming down, you see there was a very big volume on it. So I just gave you guys a straight up answer. Whenever you look at the volume, pay attention to that level very closely. Okay, of course, doesn't have to be one line, the range of the level. So you see, when the market was having a big volume, see market go down. You see, when they come back up, you see how well they've been sort of like defended by this level.
Yeah.
So you see, if you're a normal technical trader, all right, you will be thinking that every day going up, you would think it will go up a lot higher, right? But you see, it didn't really, right? So because I would say that is one of the main reasons it was a high volume, I would say high bar or long. The people call it bearish engulfing bar. At the same time, the volume is rather high as well. All right.
Okay, that's a good
So you
point.
can see how well they sort of like a gate. So I use the word again, gatekeeping the price again. So
Yeah.
now we are seeing we are seeing what we are seeing right now. Yes.
Okay. Good point, right? So I hope that answers the question. Okay, bro. One more on dollar yen, right? So I think I will just keep it to the last two charts, right? Because I don't want to drag this interview too long as well, right? It has been 1.5 hours. Thanks for the insight. I think this really benefit a lot of traders as well. Right, dollar yen.
Hey guys, if whatever I'm sharing right now, if it's very beneficial, please press like or comment. Please do us a favor. Please share in your wall as well. And of course, please like Fullerton Market Facebook page as well, okay? Because they are the one who making this possible. All right.
Thank you, bro.
There's one point I want to mention.
Yeah.
Okay. When it's come to forex, right? When it comes to forex and future, we do not have US dollar JPY. We only have JPY.
Correct.
So when it's go to future, okay, let me show. See, you can see that they have JPY alone. So you have to look at it in the flip way. So here, if the JPY were to go down lower, that means US dollar JPY will go up higher. So you need to like a flip on that. Okay, so it's also true on JPY. It's also true on CHF. It's also true on Canadian. Okay, please aware of that. Yeah. So you can see here as well. All right, JPY basically they are stuck in between two major two major range. So you can see here when the market was rising, you see such a volume here. Can you see that here?
Yep.
All right, and market rise up further. You can see there's such a volume here as well. Okay, so there's two different array of volume that's supporting the price itself. So basically, what they have happened is it have become support and resistance. So market go down further. Of course, sometimes they really go lower, but immediately they come back up. They are being supported well by this price, and now they are trying to break this level, and apparently they are failing so far. So this region have become a resistance. So they might go lower. So if the JPY go lower, mean what? US dollar JPY might go higher. Yes. So I am expecting US dollar JPY might go higher. All right. I already have a long position. I long somewhere about a few days back, somewhere around here. Of course, nobody can see the future, right? So I was thought that it was our lowest level, but of course I am in a bit of drawdown, but of course I'm not out yet. So I'm expecting it might go up higher. Okay. So I'm expecting it will go up higher. And another thing that I want to point out, okay. I have a long on US dollar CHF as well. Okay, so basically I have a few position. I have long on US CHF. I have long on US dollar JPY, and I have short on. Okay, so I'm still holding them. Yeah, but I'm not actively adding a lot of position, but I'm still holding them.
And of course, for the audiences that are in, just to take note, right, these are all personal opinions of Carlton, right? They are not investment advice. right? So this is just some disclaimer, right? So these are not investment advice to tell you that, hey, you should go in now, right? It's just an opinion of Mr. Khaldun as well. And of course, whatever we have said is just our opinion, right? Does not constitute into investment advisors. Right?
You make money. I don't earn anything from you, so it's up to you to follow, right?
Yeah, daily forget. Okay, good point. Okay, is there any other questions? Right, it might be charts, live charts, maybe one more. Okay. So let's see. I think we actually covered quite a bit of stuff, right? We're talking about the US election, so I'll just sum it up a little, right, while waiting for some comments to come in, right? So we actually talked about who are the macro of the market, inflationary and deflationary, and 3rd November. That will be a very, very interesting day, right? Even for me, it's like once a lifetime, if you are in the market, you are trading, and this day come, this is really, a testament of how well you will do, right? But of course, it is not saying that you should go to the market, right? Some of the traders that I know, they have already shut down, right? They say that, hey, let me go on holiday. There's no point fighting the market. Yeah. So, of course, inflationary, whether Trump or Biden win, it doesn't really matter, but let's see how we can profit from that, right? So, Team Trump, Team Biden, doesn't matter. And what we can see is that from what the slides that Khaldun have shown, right, if Trump were to win, more than likely or not, market might go up, right? Inflationary, we're looking at inflationary, right? And of course, Biden, he is more of a socialist, right? My own opinion, more of a socialist. He wants better benefit for the people, right? There's no right and wrong on that, right? But that will be slightly detrimental to the economy in terms of companies' earnings and whatnot. Okay, so just take note of that. So there's two camps. Just take note of your trading as well on whether who wins. Okay, let's see of the comments. Right, I think so good. So far, so good. I think we are done for today. Wow, 1.5 hours. Thank you so much.
I also didn't know it would take that long.
Yeah, that's great. I think that's great. I think all the viewers, or the audiences, they are loving it. And of course, for those of you guys who really love the content, right, in the future, we'll definitely have more interviews with Mr. Khaldun, maybe right after the presidential election, right? We might have one more very special interview. And of course, if you want to know more about what Khaldun is doing and his team, right, you can visit his Facebook page on Sonic R Mastery Trading Course. And of course, Telegram group, which I'm in as well, right? Sonic Traders, right? Just type Sonic Traders and you can find. And there are always analysis on currencies, stocks, and even indices on their page. Right, bro?
Jokes as well. I mean, I sometimes share some joke as well.
Yeah. I saw, right? So, of course, it's not very serious kind of a chat, right? It's more of a community as well. Okay, let me go back to the comments. Right, okay, good. So far, so good. Okay, bro. Thank you so much, man. Thank you so much for today. Really love the content that you brought today, and I believe all the audiences is loving it as well. All right, so let's hope 3rd November, or maybe after 3rd November, we will see each other again.
All right.
Okay. Thank you so much.
Thank you very much. Thank you very much, bro.
No problem.
Again, and also I would like to thank Fullerton Market to making this possible. And to the audience, if you like this video, I mean, Lewis has spent a significant amount of time on this to help me, to bring me in and stuff like that. Please make sure you like their page, and also please like and share and comment this video. Please.
Right. Thank you. Right. So like, share, and follow Fullerton Market's page, and of course Sonic R Mastery page as well. Right. Thank you, everyone. Have a good night, and thank you, Mr. Khaldun.
Thank you. Trade safe. Thank you.
Right. Okay. Thank you, guys, and I'll end this podcast now. Right. Thank you.